Repayment mortgages. Can you claim your mortgage payments on your tax return? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. You have a repayment mortgage, great. That is awesome. You're going to be paying down your mortgage, and over the years you're going to suddenly find that you have more equity in the property and you're going to eventually own that house. From a tax point of view, can you be claiming that mortgage payment as an allowable cost? No. It is a very definitive no. There is no way that mortgage repayment, which is both a capital and interest mortgage, can be claimed on your tax return. However, that doesn't mean to say that you're not going to be able to claim anything, because you can definitely be claiming something to help minimise the tax on your tax return. However, the key thing for you, for when you are having a look at this, is you need to make sure you are getting your mortgage statement. And that is going to be a very important piece of paper for you to clarify exactly what you can be claiming on your mortgage. Now, you may have heard of something called Section 24, and this is what is going to be impacting you for that mortgage interest that you can claim. Historically, you'd have just claimed all of the mortgage interest, so that's what's on your mortgage statement saying mortgage interest for the period. You would be able to claim that just as an expense. Under Section 24, which was introduced a number of years, this restricted the relief that you could get to just 20%. So for a lot of people, if you're only a basic rate taxpayer, this is not an issue because it does change how your tax is calculated, but the net effect should, if in effect, be the same as it was before. So how do we need to calculate that mortgage interest is probably a good starting point, because mortgage statements, if they're anything like mine, don't come to the 6th of April or 5th of April each year. They come at whatever month that they feel like coming. And normally it's to do with when you took the mortgage out. So on that basis, you may actually need 2 sheets of paper, and they may not come at the right time of year for you. So the 2 pieces of paper are the mortgage statements, which cover the whole tax year. So if your mortgage statement doesn't come till January each year, then you've kind of got probably a problem, because you may be going to have to leave your tax return till the very last minute to get accurate figures. Now, that isn't to say that you have to do that. And what I would advise in that sort of scenario is you can either phone up and get a copy at an earlier stage, or if that's not the easiest of things to do, which I know some mortgage companies are not the most easy to deal with, you can put in an appropriate estimate. And when I'm talking estimate, we obviously want to have that full mortgage statement for the full year, and we can then see exactly what interest has been paid over that time period. Obviously then we may have a few months which we don't have that information for, but if we know that the mortgage is about the same, if we know that the interest rate hasn't changed, there should be an appropriate estimate that can be put in for the months that are missing. But please note, this is only the interest. It is not the full repayments that you are making, because the repayments you are making as a capital and interest repayment mortgage mean that you're actually paying some of the capital down, which is paying the loan. It is not an expense to you. It's just repaying money that you've borrowed. So the key thing here is that you are going to take, if you've got 2 mortgage statements, great, you can apportion them for the periods that are the appropriate periods for the tax return. If you don't have the actual paperwork, I would suggest doing a reasonable estimate, and then when you come to do the next year, you can take off what you estimated to leave what you need to include, and then continue going forward through the life of the mortgage. Obviously, the key thing to remember there is if interest rates are changing, which they have over the last few years, that you make an appropriate apportionment of what you think the interest will be to make sure it's realistic and reasonable with what you are putting onto your tax return. As it's an estimate, if you are having to go down that route, make sure that you do have that documented. So if there is any questions from HMRC, you can show them exactly where your figures have come from, the evidence that you do have, which will be your mortgage statement. So make sure you keep that safe, and then the calculation to get to the final figure. Now, how this is then calculated is that your rental income and expenses will have gone through your tax return, and I'm going with most people are happy with that area. The interest that you are now putting on from your mortgage statements for your repayment, capital repayment mortgage, will now be going on in, I think it's box 44, 45, but basically the interest rate relief. Now, this interest rate relief is where they take a 20% tax credit off your tax bill. So you'll have already calculated if you're working, if you've got other income, dividend income, all that sort of bedazzles, bits and pieces. That will all calculate towards your total income and how much tax you have to pay. So you literally get to the final tax figure that you have to pay. Before then, we look at this interest rate relief. Check out the video on the full calculation because that will explain how it works. But in effect, you're roughly taking 20% of the interest that you've paid. About a few caveats there depending what has happened on the rest of your tax return. And then that will be deducted off your tax charge to reduce how much tax you pay. So the question of, can I claim interest? Can I claim my mortgage payments? You can't claim your mortgage payments, you can claim the interest, and it's as a tax credit now rather than as an expense on your tax return. Some other points just to highlight, because obviously we get a mortgage, we potentially look at refinancing every couple of years, depending what the rates are, depending what your product is doing. Now, on the basis that if you are refinancing, if there is any additional costs, so we're talking about broker fees, we're talking product fees, any additional fees for that mortgage for setup, all of these fees will also be included in your tax return and you can claim all of these. However, again, these fall under the finance costs area of your tax return and they will get the finance cost relief, this interest rate relief credit. So you'll get a 20% tax deduction for all of these broker fees, finance costs, product fees, arrangement fees, all those things that fall to get the loan. That all comes into play here and it helps reduce your tax charge, but it's not quite seen as an expense on your tax return as it historically would have been. To find out how those all fit together and what falls into the finance cost element, then just check out the video on the channel which talks about the finance costs and what is classified as a finance cost for income tax purposes. Overall, hopefully you can see that you can claim your interest on your mortgage payments. But as a repayment mortgage, it is crucial that you just realise that it's the interest element and not the full payment. I know I've seen a few tax returns where the full payment's been done and it has had to be corrected to just make sure that it's not claiming more than you should be claiming. But I can 100% tell you that yes, the mortgage interest itself can be claimed. If you have found that you haven't been claiming it for whatever reason, then check out the video on how to amend your tax returns on the channel, and that will help you deal with the amendments to claim that in previous years if you have missed something. And if you want to know about how it actually works with the interest, check out the section 24 video, which takes you through how the calculation works so you can see how that is going to impact your tax calculation. Hopefully today you've discovered exactly what you can be claiming when you're putting your mortgage payments, or your interest should I say, on your tax return. If you've got any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing.